Hey, Dave Knight here at 123daytrade.com. Thanks for watching. Thanks for being here. I demoted myself to my practice account for the next few days, at least until after Labor Day, until I've got to work out something in the low volatile market. I've looked back at my notes. I've looked back at how I've gotten funded, and 7 of the 9 times has been due to high volatile markets. So been able, when the markets are more volatile, in other words, when I've been able to pull out on average 50 to 60 ticks on my winning days, you can see all of a sudden it's a lot easier to hit any profit target that Top Step Trader puts out. So then it comes down to how high does a volume bar have to be to warrant taking a trade in a low volatile market. 1,000 bar doesn't work. 500 bar doesn't work. Does a 1,500 bar work? Well, maybe. Does a 2,000 bar work? Well, maybe. Does a 5,000 bar work? Definitely. But how many 5,000 volume bars do you see? The last 5,000 volume bar that I saw on the charts was yesterday after the inventory, and it was worth a 3p move on the way down. So at least a 3p move, depending upon how you approached it. Anyway, so what I'm getting at, and I've been going at this for 4 years, guys. 4 years I've been at Top Step Trader trying to figure out this fucker. And I know how to beat them, but I can't beat them trading the way that I like to trade positionally and swing trading related. The way I trade the rest of it is tortoise and the hare. But that's because I'm willing to risk a lot more so I have a tortoise side of the trade that goes after a longer target, and that's why I have the one contract. Why you see me trading one contract, and you think, well, why don't you get out here? Well, you don't know how far a market's going to fall. You don't know how far a market's going to go up. You just don't know. All you can do is trail behind it to see how much you can get out of it, or how much you can get on the downside of it. All you can do is trail. The only way that you can go against this is if you have the hare part of a trade. So in other words, you have a set profit target that you're willing to, minimally speaking, to pay the cost of the other side of the bad side of the trading. So you can't do that. At least I haven't figured out a way. The only way that I can figure out how maybe to do it on the 30K account is if you limit yourself to one trade, but that one trade you got to limit yourself down to trading that one trade, and you got to have a good volume bar. You just, in other words, you're going to be sitting with your hands underneath your ass for more times. So that's probably the best way to go about it. I mean, I'm kind of convincing myself how the best approach, because everything else doesn't work. Everything, I mean, personally, I haven't taken a positional trade or swing related trade since June, since the market was above 2.0 in the ADR that I look at. This measurement, we were briefly above it for like sometime last week, and then throughout the summer, but a lot of times in the summer I don't even bother trading in that sense. So the summer months, my period of time positioning swing trader related is usually September through December, and then January through May, June. And then I don't even bother with most of December and January. So where there's 4 months, 4 weeks there, 4 weeks in July, I'm finishing up in June, I'm looking at August. August has been a bitch. There's no other way to put this crude oil market in August. It's just been a bitch. It's just been very, and I look back at my combine, the last combine that I've been in, and of the 11 trading days, only 2 of them have been profitably to the point of 3p. So 11 trading days has went by in the last combine, and of those 11 days, only 2. Well, if I would have been perfect, and perfect is a measurement of being able to say that I would have taken every trade perfectly. If I was perfect, there was 4 days of those 11 that was warranting getting a 3p profit target. But you have to be willing to allow the market to move against you. before the market would go to that. So more times than not, the market, like with the exception of yesterday, once you went short, it went pretty much down after 9:31. You could have caught a 3p profit target and not really looked back at yesterday. So the blue line shows up, you get in, and you would have pulled out 47, 48 ticks, I think, yesterday on the way when it moved back up against you. Anyway, so I wrote some notes at 5:30 this morning, and I want to kind of read these to you because I'm just trying to figure out. I wrote down 1p. Okay, so does ADR dictate profit versus a loss? If I use a 1p profit target versus a 1R trailing stop on the initial entry, will this improve my trading results? ADR is average range of movement. Can I trade two contracts? One that goes to a 1p to 1.5p profit target and the other after the home run. Well, I just figured out today that if you get whipsawed on both sides and a 1K volume bar, guess what? You're down 40, well 30, 40, I was down 45 ticks in the practice account on 2 trades. So that's not conducive. It's not conducive. So then it comes down to how high does a volume bar have to be to warrant a trade? Well, 1,000 isn't good enough. 500 is not good enough anymore. 750. So I've moved up from 500, 750, 1,000. You know, getting my ass kicked and whipsawed in this since, guys, I haven't been in funded since April. So it's been May, June, July, August, and I'm past the point of frustrated now. So 4 months, and I know that it's all because of the volatility that's going on in the markets right now. My average win is not strong enough to carry me through to the next stage. And I basically, my bottom line is this. I want to pull 5,000 at 100% from Top Step Trader. And I want to take that money from them, and I want to open up my own account. And if I blow the 5,000 on the tortoise and hare on the other side, then so be it. But, oh well. But I still have my funded account though. All right. So what will I give away the bigger moves, the 3P moves? Do I simply have, I can't even read my fucking notes now. Do I simply have a trailing stop against ADR and take what the market gives? They say the key is small victories. That's hitting singles. If my expectancy is greater than my loss on a trade, in other words, if 1p to 1.5p is greater to be hit on a trade than 1R after entry, then it is simply better to take the low volatility movement. Can I trade the tortoise and the hare inside the 50 tick combine, meaning a 30K? For instance, low volatility allows the second contract to be added, but is it beneficial? Is it simply better to get the singles, build the account base until market conditions change to favor holding for more profit? This way of trading will insulate you against the retracement sides of the market, which have already taken profit on the trade. The market has a tendency to come back over and over again to the break point. I could possibly set up for a third profit target. I could possibly set up for a 3p profit target, then where and hit in a quick moving market gives a bigger gain on occasion, but more quickly after hitting it. This will generate a lot of stops getting hit, but it will insulate me on some of the retracements back to break even. A lot of my trades initially show some form of gain, but come back and knock me out. I know the answer is a tortoise and the hare, but can it be done in the 30K combine? Or do I need the 50K combine? And I figured that out in that video. The 50K combine with a $1,000 weekly loss at FTP can't be used either. The question being, what is more apt to happen? A move against me to 1R or a move to 1.5 to 2P in a low volatility market? Well, I'm going to tell you, it's more apt to move to 1R in a low volatile market. My biggest trading gains come when the market moves quickly without looking back, but this only happens on small occasions, especially in low volatility. What if I trade 2 contracts and target one contract with a trailing stop and the other going after a 1p to 1.5p target? I trail the initial contract, but I don't budge on the second contract stop. So this will give a market that is moving to a 1R stop, but insulates against the move that goes to break even that goes back. Can volume dictate how many contracts? How much volume do you have to warrant a trading situation? And I wrote down some numbers of yesterday. Yesterday's high volume numbers, skyscrapers, were 5301, 2874, 1830, 1574. So where does the market have to be on a volume related basis to warrant playing the game at Top Step Trader? Well, I'm going to tell you real quick that I'm moving up to 1500 in volume. That the ball is moving up to 1574 is the lowest of those four numbers I read out yesterday that made the market be a little bit more on the volatile side. So otherwise, I'm going to have to stand aside. I mean, there's going to be days that are just going to get away from me. 500 is not enough. 750 is not enough. 1000 is not enough. Is 1500 enough? Until we get above 2.0 in the ADR and the average profit you can take on the trade is on a 3P move is above 70, 60 to 70. In other words, to be able to knock out a 1P profit target around 30. Minimally speaking, 26 to 30. 1P has got to be 26 to 30 to warrant anything at this point in time. Average range of movement. So 1R average range of movement right now is 13 ticks. Well, guess what? 13 ticks is run against you a lot more than run for you. Average range of movement is 13 ticks right now. That's really freaking small. So then it comes down to, you know what? I've got to sit in WoW and fish, and sit and fish and fish and fish, and just make fake gold in WoW while I'm sitting there waiting for the market to be conducive to trade. Because look at this crap. It's all the way back to the break-even point again, based upon a 1000 bar. $1,000 is not enough. 500 wasn't enough. 500 was enough at one point when I put out the CL port strategy. Volatility was like 2.5. I mean ADR. It was warranted. Now all this stuff is not warranted. So when I get the crap that I get through, I know why I'm not in funded. I do know why. Because my average profit isn't high enough to withstand the loss side of the trade. So I'm trying to trade every day because I want to trade. I want to take a trade. The problem is that there's days like today that say fuck you and just take your money from you. So then it comes down to what warrants a good trading day and what warrants to stay away from it. Well, in low volatile markets, you got to have some kind of form of something coming onto those charts, like yesterday after the release of the report, that warrants being involved in the trade. Otherwise, it's got to be standing aside. So I'll hit my practice account up tomorrow again and see how I look at it. I'm going to back into the combine next week after Labor Day. Looking at next week with Labor Day, it looks like Thursday will be when the inventories come out. I'll look at the economic reports. Usually I don't look at it until Sunday night for the next week. So what I know right now is that on Thursday, with the holiday in the States on a Monday, that the inventories will come out at 10 a.m. CST next week on a Thursday. And I can tell you real quick that a holiday with the inventories is not a good trading strategy more times than not in the CL pit. Yesterday was a good trade. I didn't show anything. I had the problems with my video recorder yesterday, but it was a nice trade setup to be short and take it down after the initial surge that came up. So, boy, I tell you what, if you would have been Johnny on the spot and think that I really thought yesterday that we were going to get to $70 a barrel. And it got close. It got up to what, 69.80 later in the session, and then today it got up to 70. So I think the high is what, 70.08, 70. What is the high today? Yeah, 70.08 today in the October contract. Anyway, I thought that I would put something out there for you because I'm not as stupid as I look. I talk about things occasionally, but you got to understand how the odds are stacked against you. But I've talked about this before. It's a game inside a game. The game itself is trading, but the game inside the game is all the rules that you got to negotiate. So then it really comes down to, honestly, when is a good time to trade and when is a good time to stand aside. We all want to think that we're trading gods, that we can make money like a cash cow and use the markets for our ATM. Well, guess what? It doesn't work that way. It just doesn't work that way. Dave Knight here at 123 Day Trade. Thanks for watching. Thanks for being here. I'll see you in the next video I put together. Bye for now.